Netting is a fundamental way financial institutions and traders simplify their obligations by offsetting transactions against each other before final settlement. At its core, netting is about calculating the net result rather than processing every single individual movement of cash or assets. By combining multiple trades, firms can significantly reduce the total number of settlements, which lowers operational risk and improves liquidity. These benefits make the entire financial system more stable, ensuring that large volumes of trades can be cleared quickly and safely. While gross settlement processes each trade instantly, net settlement waits to aggregate trades, creating a simpler final balance. This chart shows how netting dramatically reduces the total volume of money that actually needs to move between parties. It is a silent but essential process that keeps the plumbing of our global financial markets running smoothly every single day. Understanding these mechanics helps you grasp how markets function behind the scenes. Subscribe for more financial basics, and thanks for watching.